Okay. So for us,
for me, we subscribe this enough.
Sir Francis, I don't mind you. Okay, so for this question, they are asking you the procedure you would use to validate the estimate. And based on all that we have read, one of them is you have to require from management or ask them to give you data, the data on which they use to, make this estimate. So it says inquire of management how the accounting estimate is made and the data on which it is based. So I will go simply and say you have to inquire of management the data used to determine the estimate. I think that makes sense. Then the other one is um, you can also evaluate whether the accounting estimates in the financial statement are reasonable or misstated. Remember, you are looking for 3 marks, so I don't know how many they said they should write for that 3 marks. Let me go back. So
3 points, blacks.
3 points, 3 points for 3 marks. It's 5 marks, so it means you need 5 points. It's 5 marks, so any 5 points at 1 mark each for 5 marks. Okay. So we have spoken about the data, whether the estimates are reasonable or misstated in the financial statement. The other one says review the judgment and decisions made by management in the making of the accounting estimate to identify whether there are indicators of possible bias. So yes, the summary is that you have to check whether there was a possible management bias in the estimation. I think we cannot write the same English, but if it's around the same idea, why not? Okay, so I think that one to make sense, right? You can write your English. Okay. Then it says obtain sufficient audit of the evidence about whether the disclosures in the financial statement related to the accounting estimates and estimation uncertainty are reasonable. So you also have to check for disclosures of such estimates in the financial statement. Okay. Then one, obtain written representation from management and where appropriate, those charged with governance, whether they believe significant assumptions used in making accounting estimates are reasonable. Okay. So that's also another procedure. You ask them to give you a written representation, okay, to justify whether the basis for which they use to make these estimates are reasonable. Okay, it makes sense. Then question B, for each of the 2 issues above, 1 or I, evaluate the appropriateness of written representation as a form of audit evidence. So the question is asking whether it is appropriate for you to have the management write, okay, give a written representation of whatever is happening. Okay, so solution. So it says receivable balance owing from OB Limited. The written representation proposed by management is intended to verify the valuation, existence, and rights and obligations of a material receivable balance. However, as management has refused to allow the auditor to circularize the balance, and there has been little activity on the account for the past 8 months, then there is very little evidence that the auditor has obtained. Please, I don't understand this. Anyone to bail us? So I think the point is that since management has refused to allow the auditor to circularize the balance, what is the meaning of circularize? Hey, fellow accountant, circularize. Let me check the meaning. But the end is that there is little evidence that the auditor has obtained. Okay. Because we are being told that they didn't add it to the, it says,
Mr. Moore,
yes.
so to my understanding of this, so you see, audits like you have the auditor is supposed to gather evidence to the fact that there is some receivables outstanding,
Okay.
right?
Yeah.
And in doing so, he has to inquire for management to have for management to confirm that yes, indeed, this amount of money is receivable and it is outstanding. However, it's like management is not willing to cooperate.
Okay.
Management will have to give a written representation to the effect that not willing to give the written representation, meaning that the amount has been paid. Okay, that's how me and that's how I understand it. Meaning that the amount has been paid. So it's like the auditor now has no evidence or little evidence to confirm that the amount is actually outstanding.
Okay. So this is the meaning of circular, say, sent out to other people to confirm if something is true. So it means that the management didn't allow the auditor, okay, to reach out to other people to confirm if indeed that transaction is true. So on that basis, even if management give a written representation, is that
especially the company that they said it was the company was owing them.
Okay. So since the management did not allow them to circularize, it means that whatever management gives in a form of a written representation is not enough evidence. Right? Is that what they are saying? Sir Francis. Because what I see is that the management didn't allow him to confirm. Rather, they have given him some written representation that, oh, the amount is recoverable. So the question is asking if that written representation given to management is appropriate as a form of audit evidence. In my opinion, I think it is not. It doesn't constitute a very valid or solid audit evidence because then they could lie. Or what do you think? I think silence means consent. Please, if you are confused, you bring it up so that.
So obviously. So I'm saying that obviously they're not wanting it to be confirmed to be a sign that they're hiding something.
Exactly. So it means that the written representation they gave there is not an appropriate audit evidence the auditor can rely on. I think that was what the question is trying to seek. Evaluate the appropriateness of the written representation as a form of audit evidence. Okay. So the second point says this representation would constitute entity-generated evidence, and this is less reliable than auditor-generated evidence or evidence from an external source. So I think that is the point. However, if related control systems operate effectively, then this evidence becomes more reliable. In addition, if the representation is written as opposed to oral, this will increase reliability as an evidence source. Well, some people can lie even in their writing. So overall, this representation is a weak form of evidence, as there were more reliable evidence options available. So I think this question is about the strength of that written representation as audit evidence. And I think we are all clear that it's not a strong evidence the auditor can rely on, especially where management didn't allow him to confirm or circularize. Okay. Then describe 2 additional procedures the auditor should perform to conclude on the balance to be included in the financial statement. Okay, so I think that the first one says discuss with management the reasons as to why a circularization request was refused. 2, review the post-year end period to identify whether any cash has now been received from Obe Company. Okay, so that one is 6 marks. So 3 points for 3 marks. These people, the way they are sharing these marks. Okay. The other point says review correspondence with Obe Company to assess reasons for the continued non-payment. Review board minutes and legal correspondence to assess whether any legal action is being taken to recover the amount. Discuss with management whether a provision or write-down is now required. Consider the impact on audit opinion if the balance is considered to be materially misstated. So procedures the auditor can, perform to conclude on this matter of the receivables is they can check with Obe Company if they have made any payment. They can also ask management why they don't want him to do the circularization. These are the points we are getting or gathering from here. Okay. And then you can also discuss with management whether it has become necessary for them to write down or make a provision for this debt. And then they should also consider the impact on audit opinion if the balance is to be materially misstated. Okay. So that was about the receivables. Now the warranty. In this case, the auditor has performed some testing of the provisions to obtain auditor-generated evidence. The team has tested the calculations and assumptions. None of this is evidence from an external source. The very nature of this provision means that it is difficult for the auditor to obtain a significant amount of reliable evidence as to the level of future warranty claims. Hence, written representation, whilst being an entity-generated source of evidence, will still be useful as there are few other alternatives. Okay, so it means that when it comes to the warranty, the auditor can rely on what management writes to explain or justify, because there's little you can do externally to confirm these provisions they have made. I think it makes sense, because if I sell goods to my customers and I say, if it spoils, bring it, I'll replace it. Or if there's any repairs, I'll do it. And then I make a provision for these warranties or guarantees I'm giving. You can only rely on the information I give you for the reasons why I'm making such provisions. Externally, what can you go and see the customers and ask them if they are going to return the goods or not. I think that is okay. So for the warranty, the written representation is enough evidence. Okay. And some of the procedures you can perform. It says, to reach a conclusion on the balance, the following procedures should be performed. Review the post-year end period to compare. So you can compare the previous years and see the level of claims that actually occurred, so that you can compare with the provision and see if it's reasonable. It says review the level of prior year provisions with the amount claimed to assess the reasonableness of the management forecasting. Okay, so for example, if last year customers that really brought their goods for us to replace was say 1,000 cedis, and then we have put in our financial statement provision for warranty 100 million Ghana cedis, it doesn't make sense, because when you compare the post year to the current year provision, doesn't make sense. Okay. C. The directors of Oliso Private Company have decided not to provide the audit firm with the written representation A for the warranty provision, as they feel it is unnecessary. Required. Explain the steps the auditor should take to assess the impact of management refusal. Okay, let me read what is there. Hey, please, the way you are quiet, can you hear me? Or I'm alone? Are we together or I'm alone? Oh, sorry. Oh, I think my network. Sorry. I went off. Please, can you hear me now? Hello.
Recording in progress.
Hello. Hello. Am I alone? Hello. Yes.
Hi.
Okay. So the last question, I think question 2C, it says that the management have refused to give the written representation. So the requirement is explain the steps the auditors should take. So it says steps to take if written representation is not provided. ISA 580, written representation guides the auditor when written representations are requested from management, but they refuse. 1. If management does not provide the requested written representation on the warranty, the auditors should discuss the matter with them to understand why they are refusing. So one of the steps is to discuss with them. 2. In addition, the auditor should re-evaluate the integrity of Oliso Private Company Limited management and consider the effect that this may have on the reliability of other representations and audit evidence in general. So they should re-evaluate the integrity of the management. The auditor should then take appropriate actions, including determining the possible effect on the audit opinion. Okay. Now let's look at the impact this may have on the audit report. As the auditor cannot obtain sufficient appropriate evidence to conclude on the warranty, then they have to issue a modified audit opinion. So let's remember that. So I think the question is 2 in 1. First of all, you have to determine the steps the auditors should take and also assess the impacts this will have on the report. Okay, so issue a modified audit opinion. The warranty provision is material but not pervasive, and therefore a qualified opinion would be appropriate. The opinion paragraph will be amended to state, except for the lack of evidence on the warranty provision, the financial statement show true and fair view. Okay, so these are suggestions as to how you can put in your opinion. The audit report will require an additional paragraph known as the basis for the qualification paragraph after the opinion paragraph, which will describe the reason for the modification, namely that management refusal to produce a rating. Okay, so the summaries I am gathering is that the steps the auditors can take is to, one, engage management and know why they are refusing to, give the rating representation. They can also assess the integrity of management by looking at their previous representations, whether over or rating, to see whether they are honest. If somebody has been honest in the past 5 years, then you can rely that this time to be honest. All other things being equal. That's what that point is saying. And the last one says you can take appropriate actions, okay, by looking at the impact or the effect this will have on the audit opinion. And of course, you may have to issue a modified audit opinion since management refused, by putting in some of these statements that management, except for the lack of evidence on the warranty, the financial blah, blah, blah. So I think that is it about question 2. Please, are we together or I'm alone? I cannot feel the togetherness.
Please, we are together.
Okay, 2 more questions to go.
We are together, but
Okay. You have please, somebody should read this one. The food I ate is finishing. I need to store some for Madam Joyce essay. Please, can you read question 3 for us? Let me make the screen bigger. Question 3.
Okay, question 3. You have recently been promoted to senior manager. Please, am I heard?
Yes, we can hear you. Go ahead.
Please, am I heard?
Yes, we can hear you.
Okay. You have recently been posted to senior manager of Life Matters and Associates, a firm of chartered accountants. As part of in a given month during the audit of these clients, the financial year end for each client is 30th September 2020. You are reviewing the audit senior's draft auditor's report for the 2 clients, Factory Co. Company Limited and Toys Company Limited. For Toys Company Limited, the audit senior suggests that Toys Company Limited audit opinion should be qualified, but should include an emphasis of matter paragraph after the audit opinion to highlight the situation below. In October 2020, a legal claim was filed against Toy Company Limited by a toy retailer. The suit was from a customer who slipped on a greasy step outside one of the retail outlets. The matter had been fully disclosed as a material contingent liability in the notes to the financial statement. Audit working papers also provided sufficient evidence that no provision is necessary, as Toys Company Limited's lawyer have stated in writing that the likelihood of the claim succeeding is remote. The amount of the claim is fixed and is adequately covered by cash resources. For Factory Company Limited, a listed company permanently closed several branches in May 2020, with all closure costs finalized and paid in August 2020. The said branches all produced the same item, which contributed 10% of the Factory Company Limited total's revenue for the year ended 30th September 2020, that is from 2019, 23%. The closure has been discussed accurately and fully in the chairman's statement and director's report. However, the closure was not stated in the notes to the financial statement nor separately disclosed on the financial statement. The audit senior has proposed an unmodified audit opinion for Factory Company Limited as the matter has been fully addressed in the chairman's statement and director's report. Required: A. Evaluate whether the audit senior's draft report is appropriate, and where you disagree, recommend the amendments necessary for the draft auditor's report of I. Toy Companies Limited, II Factory Companies Limited. Should I continue with the B? Okay, B. Assuming the auditors of Life Matters and Associates are contemplating whether to use emphasis of matter paragraph and other matter paragraph in the audit report, explain both options and the situations when each is relevant.
Okay, thank you. I think
You're
the B there, I remember when we were looking at the content of an audit report or the structure? Yes, the structure of an audit report. Remember, we said there are these two important areas: the emphasis of matter paragraph and then other matter. Okay, so but let's look at the A. The A is asking whether the senior audit or the audit senior's draft report is appropriate. So, my dear colleagues, what do you think? Is it appropriate? Before we look into the solution, yes, so let's look at the toy. For the toy, the audit senior suggests that Toy Company Limited audit opinion should not be qualified, but should include an emphasis of matter paragraph after the audit opinion to highlight the situation below. So we are being told the situation was that there was a legal claim filed against Toy by a retailer. The suit was from a customer who slept on a greasy step outside one of the retail outlets. The matter has been fully disclosed as a material contingent liability in the notes to the financial statement. Audit working papers also provided sufficient evidence that no provision is necessary, as Toys Co. lawyers have stated in writing that the likelihood of the claim succeeding is remote. The amount of claim is fixed and is adequately covered by cash resources. Okay. So to you, do you think that what the auditor said is appropriate? For me, I think yes. So please, let's share our opinions. So. And the reason why I'm saying it is yes is because, you see, he says that the audit opinion should not be qualified, which means that we should go ahead and say that, oh, the financial statement gives a true and fair view. But he also hints that we should include an emphasis of matter paragraph. And so in that paragraph, we are going to talk about this legal claim. And since it has already been established and we know that the amount is fixed, I don't think it will have any material impact on the financial statement for us to qualify our opinion. So I think he was right here. But if you look at the Factory Co., that one, I think that one, he said he proposed an unmodified. Anyway, let me go to the solution and see what is there. Since senior accountants are quiet. Okay. So question 3. It says that the claim was an event after the balance sheet date. Suppose the accident occurred before the year end 30th September 2018. In that case, the claim gives additional evidence of a year-end condition and thus meets the definition of an adjusting post-balance sheet event. In this case, the matter appears to have been properly disclosed in the notes to the financial statement. A provision would only be necessary if the claim was probable to succeed, and there is sufficient appropriate evidence that this is not the case. There is therefore no material misstatement and inability to obtain sufficient appropriate audit evidence. Therefore, the audit manager is correct to propose an unmodified opinion. So I think for the problem be anymore. However, the audit report doesn't need to contain an emphasis of matter. So that's where I would have gotten it wrong. It says the audit report doesn't need to contain an emphasis of matter. Paragraph. Why? I say that modification to internal auditor's report states that an emphasis of matter paragraph should be used to highlight a matter where there is significant uncertainty. Oh, okay. So colleagues, please note too. You only use the emphasis of matter paragraph when the issue has a high level of when there is a significant uncertainty. Uncertainties are usually only regarded as significant if they involve a level of concern about the company's going concern status or would have an unusually significant effect on the financial statement. This is not the case here, as there is enough cash to pay the damages. Okay. So we now know at what point you have to use the emphasis of matter paragraph when the issue has a high level of uncertainty. Okay. Let's go to the factory code. The factory code disclosures constitute a discontinued operation. Due to discontinue a separate major component of the business, it is a major component due to the 10% contribution to revenue in the year 2018 and 23% in 2017. In addition, it is a separate business component of the business due to the factories having made only one item, indicating a separate income generating unit. I see a former camp was a semo. The winner. Under IFRS 5, there must be separate disclosure on the face of the income statement of the post-tax result, blah, blah, blah. The revenue and cost of, Charlie, I'm even tired. Also, failure to disclose the above information in the financial statement is a material breach of international. So it means for factory code, there are issues there because they were supposed to even make a disclosure of that asset held for sale and discontinued operations. They didn't do that. Okay. So the audit opinion relates only to the financial statements that have been audited. Therefore, the content of other information and are irrelevant when deciding if the financial statements show a true and fair or fairly represented. So I say the matters is material but not pervasive, and therefore, and except the opinion paragraph should clearly state the reason for the qualification and indicate the financial significance of the matter. So are they saying that the senior auditor is correct or not? I can't seem to see that point too. Senior colleagues, please, what are you seeing? Me, I'm not seeing anything with this factory code limited. The solution gives an indication that there is no disclosure of the asset held for sale and discontinued operations. But the auditor, let me see what the auditor said. The auditor has proposed an unmodified.
Questions like this, they have to pray that he'll do his own marking scheme. What if he follows this marking scheme here?
Because for me, if I'm answering for the Toys and Co, I'll say that what the senior auditor said was correct, because the event that happened, was properly catered for. So it doesn't create any misstatement in the financial statement. But for the Factory Co, it says a listed company permanently closed several branches. So they closed several branches. So this is very material, because these branches are bringing in more profit and more sales revenue. So if you are shutting them down, closing them down, it will have an impact on your financial statement. But what did the senior auditor propose? An unmodified audit opinion. Please, Sammy, what is that unmodified opinion? Is it opinion without any reason, or maybe a few? Yeah, maybe a few.